Okay, hello and good morning to everyone here in the room. Today is Thursday, August 3rd. Good to be with you here, guys. This morning, we're just getting the release of initial jobless claims and continuing claims. Initial claims coming in slightly below expectations, 243. We were expecting, we got 240, and continuing claims slightly higher than expected. And you also got a little bit of an upward revision of the previous month's read. Not seeing too much of a reaction here to kick things off, but good to be with you guys here this morning as we get ready for tomorrow's non-farm payroll report. Good morning, Dee. Great to see you. Can we do euro dollar and dollar yen first? Catching a flight in London, need to run the airport in 30 minutes, please. Yeah, sure. We'll segue real quick. We'll go over, obviously, the sterling crosses. Okay, that was the focus of last night's update. The pound really getting a beating here on the back of some of the commentary. But for D here, we'll go ahead and take a quick look at the euro and dollar yen first. So euro dollar number one looks like this. Nothing's really changed, okay? We stretched into the final area of last resort resistance that we've been talking about, 118.76. That's the 2010 low. Also, again, over the next couple of days, still converges on the upper parallel of the broader formation. So I can't get bearish. Momentum is still in overbought territory on a daily basis. You guys knew I was short on this earlier in the week. Took half on a 30 pip drop there, and then as soon as we pop right through, I took another stop. So again, at this point, I'm not going to be really trying to do that again unless we get a little bit more convincing in near-term price action. So for the euro, none of the levels remain, or the levels remain unchanged, rather. If we break above here, there's really nothing to do. That gap fill, basically, which is 120, okay, 119.98, but it's really the upper parallel, and that takes you basically into like 2070, 2060 region. So I'm very weary of trying to chase this from here. Okay, you got a 100 pip run to the upside if we do break. Near-term support on the daily chart from a structural standpoint, it'd have to be along that median line, so determinant on time. You got a nice trigger in momentum that's been pending for, well, gotta say over a week at this point, still there, right? Take a dive into the intraday chart. Looks like this. Even the near-term embedded channel remains in play. Look where the spike high was yesterday, right? So nothing's really changed my opinion on this thing. I'm kind of just still weary and very cautiously looking for short triggers. I'm short at 118.78. Where to place the stop? D, it would have to, I mean, if you can take a stop that high, it would have to be against the highs at this point. Just look at slope. I mean, this thing could dilly-dally along this within the confines of intraday price action. Obviously, when we're looking to invalidate these longer-term median lines, it kind of really it requires a daily close above it. So intraday, you could see this thing spike into the high or try to tag that channel resistance already. Look how many times we touched it. 1, 2, 3, 4. That was a fifth touch. And then again, a good place to kind of look for a little bit of a bounce maybe would be at these lows. And then channel support. This kind of range right here is where I'd look to take a little bit more off that trade. D, does that make sense? Again, just my humble opinion, D. She says, yes, thanks. Okay. Moving along to dollar yen. Any questions on the euro, guys? We're moving at a pretty fast pace here. Just want to make sure we're going into NFPs. The risk, again, is for maybe a dollar jam into the lows again. Maybe this thing rallies back into channel resistance, but broadly speaking, the exhaustion outlook is still there. We're still even marking divergence into these highs on the 240 minute. Here's the 120 minute. Excuse me, here's the hourly. So not so apparent on the hourly, but it's there. Okay, next up on tap, let's jump into number 2 will be, well, let me do the DXY real quick. Basically the opposite of the trade. Guess what? DXY has its own channel to contend with in purple. I guess I should make this a little bit thicker at this point just to highlight it. But this is pretty big. Channel resistance, highlights near-term resistance right along last week's high there that we made late in the week. Support, support, support. Look at that test yesterday, which was a level we were watching, 92.62. Those swing lows from way back here in 2015, August of 2015. And of course, the weekly close for the DXY is going to be absolutely critical this week. You know what I mean? If this thing is able to close the week and close back northbound of 93, that would scream just a near-term exhaustion trade for a little bit of a rebound here. So we're still at pretty big levels heading into the non-farm payroll report tomorrow, guys. Don't take an aggressive stance. We're just setting the opening ranges for August. If you're in the swing side of trades, Jamie's already killing it there. So just stay tuned for any alterations to those positions. But DXY still hanging by a thread, which is interesting because you really saw, again, the sterling took a real beating. But that still hasn't been able to really make a broader decline. Obviously, 60% of this is the euro. But the dollar's still holding on by a thread here. Questions on the DXY or the euro? So number 3, we'll go into dollar yen here. Also for D, dollar yen is a trade we have been following. Keep in mind a very big or very strong typical reactor to US data. And here's what dollar yen looked like earlier in the month, or I guess this was close into the start of the month. We were looking at this trend line break. Channel resistance had broken. You saw a nice pop. As we came into it, 110.97, 111 was where we were looking for support. We dribbled into that region, popped higher, but then we've continued to really respect that level as support, and that has continued to be the case. Here's what dollar yen looks like now. Look at that. This was a 120, so let me make this a 120. Okay, so this was the only one that was kind of fictitious, let's call it, or pretentious. Popped right back into resistance, right back into here, and then we came into that trend line. We've just continued to sit on that trend line as support. The level that we noted earlier in the week was 110.30. Watch 110.30. It's a big region. It's the 100% extension. If this is just corrective, we kind of want to see price hold above that. It was nice support yesterday. Here we are again, testing that same level as support. So look, for dollar yen, I don't really have a strong opinion here, D. I was looking, if you guys remember last week, I was looking for this rebound and breakout to get us back into 112.90. We didn't quite get anywhere near that. Obviously, 112 capped the advance, and we just turned lower. So from here, I don't want to take a strong opinion in either direction. The August open and the weekly opening range is still pretty tight. You're looking at like basically 110 into 111, 100 pip range. So I would just be looking for a break of that range to give me near-term guidance on this. If you put a gun to my head, I would think that we would move lower one last stab again to test that longer-term slope and then rip higher. But I don't know. I think the dollar, again, it needs to see a little bit of a recovery here, and that might limit the downside for this pair. So we'll see. Looks like it's trying to turn, though. It looks like it's trying to make a little bit of a puff higher. On the daily chart, you're highlighting basically the 200-day moving average has dropped down a little, guys, here until 1143 or so. You can ditch that 50 at this point. That one. And if this turns out to be a low, and the way that we would assess that meaning is if we break above 111, just let me see what this looks like. It gives you, everything points up into 112.90, 112.70 again. So that's what I'd be looking at. Wow, and the 200-day moving average literally lines up right with that 50% retracement. So again, I'm not saying we get that high. I'm just saying if this were to rebound and give us a topside break of the weekly opening range, just at a minimum, an objective outlook would kind of take you back up into this key region first. And then obviously if we're going to see the 200 again, it's pretty much in line with last month's open right now, which also converges on that 50%, just above 112. But not my favorite trade, D. For dollar yen, I kind of go into these phases where I love the trade, it gets clean, you get something like this that lasts for a couple of months, and you're like all excited, and then something like this, and it's super clean, and then you start to get this junk, and then this junk, and then so for what it's worth, that's what I'd be looking at for now in dollar yen. I don't really have a very strong opinion at this point from these levels. I know that Jamie's looking for the bounce, and he likes this thing back above 111 as well, which would make, again, would kind of line in with what we just said. If we get this bounce back into 111.50, 111.40, 111.60 would be the range I'd be looking at. Really nice pivot in price, obviously, just looking back in price action, but also, the confluence of those things that we just talked about. So we'll see. We'll see. I do want to see it hold here, though. Make sense? Hey, you're more than welcome. Last thing is Kiwi dollar. Kiwi dollar looks like this. So before we get too knee deep in Kiwi dollar, obviously we're holding shorts on the swing side of things from 74.57. So we're in the money already on that one. Looking lower, obviously, for the break. Near term, what did we talk about yesterday? For those of you who are trading this near term with me, what did we talk about yesterday? 74 was a region we had to watch. D, I think I was talking to you about this. Former channel resistance or former sliding parallel, governed the highs here very nicely on 4 separate attempts, maybe 5 if you want to count the 18th there, before we finally broke through, and that offered acceleration on the upside. Near term, that level coincides with the reversal day close that we made back here in 2016, which was also very close to that late yearly high in November. Okay, so that's basically 74. I highlighted 73.98. The low that we made in overnight trade was 73.90. So yeah, a little bit of a bounce, sure. Anything to be super concerned about? Not yet. Okay, the thing's not going to go in a straight shot to hell just yet. But I do think you could see a little bit more of a rebound here. The high day close has still been a pivot in near-term price. So watch 74.50 for resistance. And that's kind of where I would want to see this thing hold to continue favoring the immediate short side bias. If we pop through here, then 74.80 could be a larger level of which, if we break, basically the whole thing goes to hell again in a handbasket with regards to our near-term price action. Remember, I've been trying to really, kind of my fault, getting really caught up trying to call, the high here on the rally in Kiwi. And we haven't done so well, at least on the intraday basis, trying to really attack the short side. But from here, early in the week, we really talked about a close below 74.80 triggering that downside. We got that. So that decline coming into initial support, but it's still uptrend support. So we don't want to get too excited just yet. And this is why, D, I was telling you about this level yesterday. That's where I want to really see price action kind of break. And if we do break below this, we'd expect to see some sort of acceleration. So in the meantime, yeah, could get a little bit of a rebound. But I'd like to see 74.50 kind of hold as near-term resistance. Does that make sense? For the near term, D, yeah. I'd want to see 74.50 hold as resistance. We could spike through it, um, but if we close northbound of that, I'd be neutral in this region. And again, anything above 74.80, again, you're going right back into an area that we just chopped through. What would be invalidation point for the Kiwi, says Karthik? Good question. For the broader picture, Karthik, I mean, for the broader picture, it has to be here. It wouldn't necessarily need to be this high even. It would need to be that slope on a closed basis. If we were to close northbound of 75, what was that, 75.15? Remember, we talked about this region for such a long time, and we did technically get a daily close above it. Do you guys see that? And I was all faked out, and I didn't know what to do. I didn't want to touch this thing. We pulled back. We went for another run. We closed at that level. So, at this point, slope is a little bit higher. Back here, slope was right there. Now slope is a little bit higher. So I would say, watch that gradient. If we close above that, at this point, let's call it like 75.40, that would change things. You'd be talking like about a major breakout in Kiwi. Make sense? So you see this gradient, guys? This is what we've been following. Here we are, back below. Let's see what happens on the weekly close. Is really important. And again, with non-farm payrolls on tap, you can believe that's going to be pretty big. Many thanks for the request today, and good luck. Hey, to you too. I'm off, says D. Have a safe flight, D. We will see you next week. One sec, guys. Yeah, okay, I was right. Keep in mind we have the RBNZ on tap next week too. So NFP's on Friday, RBNZ's on the 9th, which is Wednesday. Karthik says, if I try to enter a short on a new term resistance, then what would be the downside target to I first? So if, for example, we were to break below 74 here, and we test that as resistance, on the longer term or medium term, we'd be looking for a drop into this median line here. Okay, now, as far as the swing trade is concerned, Jamie's looking for somewhere in the range of just above 73.50, I think. For me, a downside break, a basic 236 retracement has near-term support here at 73.80, and then 73.40, 73.45, this, or 73.35, this region here, former swing lows. Again, that same median line, that's what I'm talking about right here. Make sense? I'd like to see some structure to decline, though. I haven't really gotten anything clear on this just yet. Questions on Kiwi? All right, so that is number 4. Let's jump back into the sterling extravaganza from last night with regards to the Bank of England and some of the commentary that came out earlier today. So they didn't necessarily lower their inflation forecast, but they did lower their growth forecast. Here's what British pound looks like now in the aftermath of the release. Big old outside day reversal off resistance. We did finally make a stab into 132.72, the upside target that we were looking for last week. Here's what pound looked like last night. there's 132.72. Okay, this was a longer dated 1618 extension off of the lows. Here's the daily chart from the start of the year, right? So that was the break that we were looking for. That was the really target that we were looking for in the break above the median line. But a breach was going to look for this parallel. So obviously we made a tag of it. Interest rate decision came out. Huge reversal. We're now looking for some near-term support heading into this slope, i.e. former highs, i.e. a 38.2. Okay, that's this region here. Now the highlights, again, they did not, like I said, they didn't shift their inflation forecast, but they lowered their growth forecast, and they noted weaker consumer spending, not things you want to necessarily hear. They've been talking about the pound drop squeezing real income. And again, you're probably thinking to yourself, what pound drop? They're looking at the broader picture in the Bank of England, that the broader Brexit decline has really started to squeeze real income. Also, that they're not the biggest highlight that came across like Reuters and Bloomberg and CNBC was the whole thing with that see weak wage inflation. It's the same thing that we're hearing here from our central bank in the US, from the Fed, as sort of one of the main concerns they're looking at. Even if headline CPI is picking up, wage inflation just isn't there. And a lot of that, again, is going to be interesting to see what their the CMP is going to do. I mean, the vote count was still 6-2. There's still a seat that's vacant. So we'll see, how this all affects policy. The comments, another major comment that I just took note of here in my notes was hiking cycle is to be more limited than traditional. Again, giving themselves that room in that as long as wage inflation remains subdued, again, they might be kind of tied with regards to how aggressive they can start to normalize policy. So again, all bearish things, all dovish thing, let's call it, while at the same time not really making a dent in an inflation forecast and kind of saying, yeah, things are steady as she goes. There's just, a lot of things that are kind of still out there. So pound reversed, okay? It's a bigger decline than I saw. Some of the pound pairs that we were talked about yesterday have gone through near-term bullish invalidation. So those pairs I kind of do not want to try to fight at this point. Pound dollar making an outside day reversal off support and marking or threatening a break of a near-term trigger here in momentum. Things you want to pay attention to. Okay. Again, I know that we're still, what's the stop that we have on our swing trade here? I think it was break even at this point at 131. But if we break below this basic slope support off the lows from June, you're likely to see a larger correction in the pound before we start to move higher. You're probably thinking to yourself, well, guys, you've been talking about a rebound in the dollar, so why is this surprising? Just because we're looking for a rebound in the DXY doesn't necessarily mean a carte blanche, kind of bias against the crosses. I still think the downside should be rather limited. Here's what it looks like on the intraday chart. Okay, so we're still within the confines of this near-term embedded slope we've been following off the lows. There's the break, okay, of 32 after tagging or just shy of that 32.70 region. So we basically spiked right into this. We broke, this is, yep, I think there's the 240 or is that the 120? 240. So that's that region right there. We spiked into it, came right off, and here we are. 38.2 first. The weekly opening range low hasn't been compromised yet. So objectively, the bias necessarily isn't done. But you had some tells. Divergence, 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 and then the data came out. Spike. Weekly opening range low. If you see that give out, now that we've moved so forward in time, I wouldn't necessarily highlight 30.50 as our bullish invalidation level. I'd probably bring that up basically to this zone right here. Basically where Jamie's looking for our break-even stop on this one. If that were to give out, it would change the broader picture, in my humble opinion. Near term, for the pound. Add to the fact that you're getting that candlestick formation. And again, you guys know me, I'm not really huge on candlestick formations, but outside day reversals off the highs or into key resistance, pretty big. Same thing on the short side. Any questions on pound dollar? Okay, so we'll look to see if this can hold to support. Actually, might be a decent area to get back on the long side if it holds, but I'm not trying to fight this at this point. It just looks too aggressive. We're still in oversold condition. That's when the market still has push. You do not want to start fading that until we recover past 30 on the upside. And it's oversold in all different sorts of time frames. Okay, there's your 15-minute. Now, sure, it might start to recover and give you a little bit of a pop, sucker in some of those guys who missed the decline, but it's just going to jackknife. On a trade like this, you have to really see how the U.S. opening range looks like. So, if you're not in any positioning here, great. If you took the short or you played the downside move on the BOE, take some off here. This is not a bad idea to take a little bit off the table, bring your stop to at least a break even or better. But largely speaking, I am looking for this thing to hold above the 31 handle if we can get that hold and stay within the confines of that uptrend. Questions on British pound? Okay, that is number 5. Next up on tap was pound yen, and this is the one that saw the bigger correction that I think at this point really warrants kind of invalidating the near-term up bias, at least in the immediate term. So not only are you making a massive outside day reversal here, of which the range we haven't seen, I'd have to bring up, why don't we do that right now? Okay, so the largest single day decline since back here. Okay, and that one was slightly larger and put us into a new low. Saw another day of follow through before anything started to turn. So my point being, major outside day reversal off resistance. Again, daily chart highlighting this is a very simple setup. There's nothing fancy about it. Basic, simple trendline resistance off the highs. Twice as speculative, 3 times as confirmed. Earlier in July trade, we did test it twice. There's the decline again. This looked like a breakout. Okay? Classic pound throw over. Outside day reversal, take this right back below. So in pound yen specifically, I do think it warrants kind of taking a side seat right now with trying to attack the long side. Now, it might wash out pretty quick, and eventually and inevitably, I do think we're going to see this thing explode. But this is not something I'm willing to fight at this point. Look at it from the near-term chart. The whole premise of the trade that we talked about early in the week, we had highlighted, okay, check it out. Basic trend line, right? There's that trend line in red. We came into it as support. Cool. We opened up the week saying, look for the bounce. We like the upside. We need to see that upslope breakout to really kind of get the breakout play. Well, we went into sliding parallel. That held. A little bit of a jerk knife here. Higher. Took out that 4670 target. That held as resistance. Our bullish invalidation level, we highlighted near-term support at 4570. Our bullish invalidation level is 4540. So technically, we're neutral here. We're flat. And remember, I know I hate using mannerisms, but it's true. Being flat is a position. And right now, I would be flat on pound yen. Now, again, if you put a gun to my head, I would think this thing would probably rip higher into this region again, then move lower. But now at this point, basically, as long as you stay below that red parallel again, 4570, you still have to be bearish now, or you still have to respect the possibility of further downside move. And I wouldn't be surprised if we do see some strength. Again, this is a 4-point touch basic trend line. If we break back below it, wouldn't be surprised to go back there, test it as resistance before we move lower. Downside targets remain unchanged. That's the 240. It's the 120. Again, the possibilities, if we do see a break of the weekly opening range, which is what we're testing right now alongside slope support, we do see a downside break. Look for a soft target here, but I'd really be looking for that drop more so near that 143.90 level, basically 144. Any questions on pound yen? Again, feel free to take a snapshot of this if you need it. So again, this held as resistance. I was looking for a nice support there, but it just plowed through, just continued to plow through. So it took out bullish inbound. You got to respect the downside from here. Are we covering gold and crude, says Karthik. We are now, buddy. Let me add it to the list. No problem. And crude. Okay, so that is pound yen, number 6. Number 7, pound CAD, which I thought was going to be a great play today too, just on account of the fact that we like the dollar CAD long, still have no problem with that trade. And broadly, I'm still constructive the pound. I'm looking for this thing to settle off so I can get back in. So why not pound CAD? Here's what pound CAD looked like yesterday in the 240. So, sorry about that, guys. So we had just made a run into the 75% line, or the upper 50 line right here. And to be quite frank with you, I thought we were going to get a little bit more of a pullback towards the median line and then rip into this target here. Who cares what I think? The thing went right through the upper parallel, just missed that upper target, and then obviously the BOE did the rest of the work. So you're looking for support here near the August opening range low. Objectively, it's the monthly low, and you made a spike there in price. That converges on the 25% line, or the lower 50 line, which is the buy sector here into US trade today. So on a trade like this, not necessarily worried that we've invalidated anything just yet on the pound trade. Whereas pound yen, that broke through some slope that really matters, right? So we got to take every trade on its own merits. A basic retracement, now that we know near term this is a high that we want to respect, puts us, get rid of that 382, make it a little bit more attractive. There you go. 6480 would be a 50% retracement. Maybe slide that up here depending on where we are in time. So kind of something like this. As a zone of support into today's trade session. Watch that. Yeah, every single pound pair is making an outside day reversal today. Something we want to always pay attention to. This is actually making it right at the 200-day moving average. Just ahead of. Yeah, so you could get a little bit of a deeper pullback, but not necessarily going to invalidate everything just yet. We have made a higher high, right? And this was the first overbought reading that you've seen in price since here. Obviously, that one, gave us a nice stretch into the highs. But these are things you want to start paying attention to. So now that we've actually made it into overbought and started to break down on the move lower in momentum, we're going to want to see 40 start to hold the support. You saw a hold of support here on 40, and guess what? Price continued to move higher. So these are the phenomena that you want to start to look for in momentum to kind of give us that clue that things are actually starting to be a little bit more of a constructive outlook. So there's room to the downside near term. I want to see if we can settle somewhere above 164.50. Questions on pound CAD. Number 7. Number 8, pound Kiwi. Every pound cross that we were looking at in the webinars, I kind of threw at you last night. So pound Kiwi looked like this. We were just peeking our nose through the median line, and momentum was kind of teetering out. So look, we noted near-term support right at 176.70 on a pullback. That's kind of where you want to see support, and that's where you want to see price hold if, in fact, we are heading higher in the pair. We're there now. We're there right now. So we need to see this hold. Let's just say that. You saw this same median line be the launching point after the dip here into the highs. You saw the median line itself give it a very nice rebound. But then on the top side, remember, when we see the breaks of these slope, if price action is going to follow through, we want to see acceleration. Give it to the sterling. Cable's notorious for this kind of price behavior. Here's the throw over, failure above resistance instead of at resistance or ahead of resistance, and then the reversal. So from here, again, I just want to be cautious. I do want to still be looking for support right around this region near term. If we break lower, if we break that lower parallel, this thing is done. The daily chart's really ugly. I don't really have any clarity on this, which is why I didn't even present it yesterday. But a pair that hasn't necessarily made an outside day reversal just yet. Okay, I want to see if today's close is above or below that 200-day moving average. That's going to be something I'll be watching for. Pound Kiwi. Questions? If we get stopped out of the pound trade on the swing, I'm not going to be touching this for a while. I kind of just want to see what pound does to open up the month. See, it'll probably be a deeper pullback. And again, that would just give us a better buy later down the road. Let the dollar do what it needs to do. Don't fight it. But yeah, we'll have to see if that 31 stop holds. Next up on tap and last of the euro, or the pound crosses rather, is euro pound. Not a trade that I usually typically follow, and here's the reason, a prime example why. This thing doesn't know resistance, or it really likes resistance, or it just wants to really fidaggle and mess with everyone. 2016 high day close was the level that we've been watching for a while. It was basically the 90 handle. Didn't quite get there on the initial approach. We pulled back. We were looking for support at the January high, so an objective break of the yearly opening range keeps us looking higher. I'm not really sure why I've been trying to short this, but there have been divergence into these last couple of highs. Again, this story made sense for me, looking for a euro pullback, and we've been constructive the pound. Obviously, the BOE can have the effect of triggering these near-term events. Doesn't necessarily mean we're seeing a reversal in trend. I don't think anything we got out of Carney today was earth-shattering, right? But for the day, yeah, sure. Intraday, maybe even for the rest of the week, you might see that kind of interrupt the broader trend. So for euro pound, though, it's still within, under these slope levels. I don't know what to do with it. It's one of those things. It's just been hugging this slope like no one's business for months now, basically for the whole year. So this is a longer term slope off the lows from 2015. And then if you take a new slope just off the December lows of last year, the highs of this year, it ends up being the same, almost the same exact slope, the same gradient. We're at resistance. We're at upslope resistance again. I got nothing to say on it. I got nothing to say on it. I thought we'd see, at least if we did see a spike, again, I'd be looking for, short triggers in this zone. Maybe the 2016 high day close into that trend line resistance, but we surged even through that. So levels unchanged, but from here, you'd still be fighting pretty strong uptrend. Karthik was asking, if you don't mind telling me what is that bar indicator below RSI? I just dropped it. That's the rate of change. So what you can do, Karthik, is if you hit question mark on your keyboard or dash forward slash and bring up the indicator, ROC is the rate of change. And this is basically measuring, it's self-explanatory, the rate of change for each day's session. So a lot of times I'll bring that up and I'll put the rate of change to 1 day. And it's basically telling me the range that each day has played on the advance or the decline. And in that way, I can look to see, oh, okay, this was the largest advance that we've seen since, well, back here. What happened there? Oh, this was the largest advance that we've seen since back here. What happened in price there, right? So it's a really good way of studying price action and being able to go back and easily identify previous areas in historical price action of where we've seen similar types of behavior. Does that make sense, Karthik? You can use that. I also use ATR, another one. You guys have all seen this before. Not only do I use ATR as a gauge for price, typically I'll use a quarter of what the daily ATR is. But again, same thing with ATR. If you just want to look at the day's range, you don't want to look at advance or decline, you could put the length, set the length to 1, and that'll tell you, okay, this is the single largest range we've seen since back here. Yeah, it's showing the same thing we did last time, right? But they're not going to all be advances. Okay, here is the largest decline that we've seen. That day gave us an even larger range, but it was on the downside. So ROC is better for giving you when's the last time we saw this large of an advance or decline. ATR is more objective, just when's the last time we saw a daily range this big. Make sense? Just tools, all tools to have in your tool belt. He says, yep, all right, cool. All right, so euro pound, not my favorite trade, as I noted last night, right before I went into this breakdown. I just wanted to highlight that, daily slope, we're still there. We're still there. Watch today's close for failure. Could be another classic pound, throw over. In this case, it would be a break of support for the pound. Okay, that is number 9. Let's jump into your questions. As always, guys, feel free to throw out any questions or trade setups you'd like to review. If you didn't hear me go over it earlier, we did cover the dollar crosses in the euro, dollar yen. What did we not cover? Dollar CAD. Let me go over dollar CAD real quick. Here's what dollar CAD looked like earlier in the week. So the major level of support, 124.15, has been the level of interest since the start of the week. Okay, I think we highlighted this back on the 30th. 24.15 is a big region, and it converged on a whole bunch of near-term slope lines, especially on the daily chart. Okay, here's what dollar CAD looks like. So you guys remember this, okay? So much here. I'm not going to go over it again. You had all this slope that converged on the 618 extension from the decline off the highs we made last year. And we were looking for the rebound. It looked a little hairy on the 28th of last month. We broke right back and checking it back as support, but that held near-term slope support. And even on the near term, held support on that second attempt. So I don't want to stress this formation I showed you guys yesterday, but it kind of has been helping a little in that once the median line broke, you saw acceleration. So don't really focus on this, I guess I should say. It is a modified pitch, so actually that might be a better slope to even work with. Just get rid of the 50 line because it's too near term here. But you want to see this kind of behavior: break above that former slope support, turned resistance, turned support, turned support. The median line for the formation we just added. Once you broke, little hesitation, but you saw acceleration, and we tested it as support, same area. Stay constructive above that median line. Ultimately, I cited 2679, 2680 on the report. Depending on where we are in time, if this thing continues to hobble around for a little bit, watch that. 2650. Basically into like start of next week, if it takes that long. But if we do continue to move higher, we break. This is still the level that we're looking for. Big region, initial resistance for this pop higher in dollar CAD. If this thing's got legs, let's see if we can hold above that median line. Okay. Questions on dollar CAD? Didn't mean to do that or that. There we go. No change to any of these levels from earlier in the week. And again, I try to make sure that the daily chart, guys, is never more than one click away. So if you don't see the daily chart accompanied with it, just go to the previous update and you'll be able to identify that. Again, just to keep things in perspective, this is where we are now. Okay, and that is dollar CAD. Let's jump into the commodity block. God, that was number 10. Here is gold and silver, 11 and 12. So gold looks like this. Wicked old gold. Never quite made it into 1281. You pressed 1270, which is where we started the week. That was a target that we were talking about for weeks. It was literally rock solid for some reason, and all of a sudden it popped right through. That was just a soft target, by the way. It was nothing really crazy or fancy. But it's interesting to see that price actually held there for a while. The pullback, we highlighted this region, near-term support at 1257. You saw a real strong reaction there and a nice little rebound. Here's what gold last looked like with the update here on SB. There we go. Back into the close of the month. We highlighted this same structure. Okay, there's 1270. This is the start of the week. There's 1254. Once we broke lower and once we started to turn, okay, it gives you the validation to add in your term retracement, which is exactly what we did. 236 choked up that target a little bit to 1257. And again, a long slope. That was exactly where this thing found a low. So you have a really decent weekly opening range. It kind of stretched into Thursday, which is not what you want to see, but it is the start of a month, the close of last month. I still think you could get one last gasp of strength into 1281. Largely, I'm thinking correction. Broadly, I'm thinking buy the correction. Does that make sense? Again, take a quick segue of what's going on in the equity market. remember what drives the gold trade, right? It's either, or what historically the purposes of gold being finding real strong legs. It's either been times of concerns over rapid or increasing inflation, or market distress, meaning recessions, massive sell-offs, corrections. These types of times, you see gold catch a bid. So the S&P, you see all these headlines every single day, but the Dow or the S&P or obviously Nasdaq always making a new high, making a new high, making a new high, right? But all in all, it still looks like it's losing some steam. Here's the daily chart of the S&P. So, I mean, the open of the month is at a very precarious time. So my point being, guys, is if we were to break slope, and we were to get a little bit of a drop or volatility starts to pick up, right? You could see gold get a really decent bid. And if it catches a bid above that major resistance on the longer term and it really confirms the breakout, there's plenty of upside to go. There's plenty of upside to go. Not to mention, all these central banks are trying to stoke inflation, right? While at the same time, they're all telling you, oh, we're going to be very slow with the interest rate hike. So all of the things that were working against gold, people saying, well, you're not going to need gold because the Fed's going to hike interest rates and yields are going to rule. And if you have a yield, why the hell would you be holding gold? Well, guess what? That's probably going to be a lot slower of an interest rate cycle than you think. And once the market starts to digest that, and if you were to get any type of correction on top of that, that's when you would really see gold catch a bid. Now, guys, I'm kind of digressing here, but my point being, it's not necessarily just interest rate play. There's a lot of things involved here. So look, you could see a little bit more of a decline, even if we were to break lower. 1241 remains the bullish invalidation level for the broader advance. 1281 is still going to be the level I want to see break out to really give us confirmation for a move into the high day close. Okay, my short at 1261, looking for 1257 as a soft target. 1257. So here's the thing. I think you're late on it, Karthik. I think you're late on it. 1257 should have been the target, earlier on the short. Now that you've gotten this type of spike action off 1257, be cautious. I don't want to necessarily scare you out of the trade, but I would just say, you're kind of late on trying to target that already. If the market has already made a move off that on the initial approach, it means it's an area of very low tolerance, meaning price doesn't like to sit there. So you see here on the way up, irrespective of it being a basic 236, a 236 is not magical in any way. But, it was resistance, break, it was support, real strong rebound. Okay, so you're looking for 247. Okay, now no, that makes a little bit more sense as far as where you're short from. Okay, so you're basically banking on a test of the basic trend line. So remember, this slope originates off of these 2 points. So sure, yeah, a drop into that region. The only thing I would say is choke up your level a little bit more to account for time. Okay, never forget, slope is what really dictates everything with regards to our analysis. At least we really rely more heavily on slope than anything. If it converges on horizontal levels, that makes it more important. But right now, I would be looking a little bit higher above 1247 just on account of where that slope comes off the lows. It's a 3-point, right? So we're already confirmed. Make sense? Okay, awesome. He says, yep. Okay. So that is gold. Broadly looking higher, still think you can get a move lower first, but I do want to look for a rebound or support along that trend line. Looking at crude, here's what crude prices look like. So we talked about the 618 rather retracement earlier in the week at 50.18 and the reversal off that level. Well, guess where it found support, folks? Made an outside day reversal right off resistance, which is typically pretty darn bearish. Slope. This is sliding parallel. The same slope we were following here, which caught the lows like no one's business. The breakout saw acceleration, sliding parallel off those highs that we made back in May, caught the exact low. Literally. Almost. We didn't even get that low on the intraday chart. It looks like we didn't even touch it. And then we ripped higher. So I'm of the mindset that this could be a simple breach of resistance, check as support, and move higher. Or let me take that back. Typical mindset would say this is a break of resistance, check as support, and move higher. But if the dollar finds a recovery, it might limit the upside. And if it limits the upside, I think you need to look for a new low here before this thing launches higher. It's been such a ridiculous rally. Let me check something real quick. I might need to rework these levels. Yep. Nope. No slope of interest off those 2 points. Yeah. Nothing to work with yet. But that's what I'd be looking at, Karthik. Sorry for the silence there, guys. We're just kind of working this out in my head. Yeah, I mean, I'm not really a big fan of it. I still wouldn't be looking to get on the long side yet. Even if it stretches a bit higher, you got that basic slope off the yearly highs, which comes in just, I want to say just below 51.40, right around here. Oh, I'm sorry, just below 51. So yeah, you could spike into that region, but like I say, guys, it's not always about just knowing the direction of the trade. It's how do you trade it? You know what I mean? If I were to get long now, I guess I could put a stop against 49, but you're already up against the region that's already offered resistance. So I don't want to do that. Trying to get short on the trade, well, you could take a short from here right against this high, but it's a real tight move. There's not really much to justify a turnover just yet. So I kind of need to see more evidence. If we can get closer to 50.18, sure, it might be worth a stab, specifically if you get near-term price action, showing you some exhaustion. Here's what the hourly looks like. You're not getting it yet. There's the 30-minute. Not getting it yet. No, you're getting some divergence. But that's how I would look to play it. It's very, very tough to try to really play this kind of mid-range here right after an outside day reversal. I'm long at 49.56. Okay, so you're in the money as 49.40 as support, and I'm targeting 50.52. Is that 50.52 or 50 to 52, Karthik? What do you mean by that? Is 50 spot 52? A range of 51 to 52, he's saying. Yeah, I mean, here's the thing with me. Personally, I would be looking, like I said, just shy of 51. I hate to be that kind of thorn in your side, but just look at this basic trendline support. Again, I try to stay as objective as possible. That's just right here. And that converges on former trendline support. 1, 2, did stab a little bit below, but it held. You got to pivot off it. That converges on that same region, and that's right ahead of 51. So be careful with round figures because a lot of people are looking at that. They're like, oh, my target will be 53. Well, market might turn at 52.98. Do you want to really miss out on that position? So I'd put my target just on a little bit on the inside of that. But I was going to say, typically for me on the intraday stuff, I don't really want to target anything outside the weekly zone unless we've broken already. So first things first, you need to make an objective break of the weekly opening range high for me to even target anything above that. Does that make sense? But yeah, it still looks like it could be losing some steam near term. Watch this into the opening. Or according to you, what must be the first target? So again, 50.18 is still going to be the level I'm going to look at. It's still going to be a level to look at. If I was holding a soft position, or if I was holding a long position like you, that would be my first soft target. So at 50.18, I chip a little bit off the trade, maybe a quarter off the trade. And then when we get to the actual opening range high of the week, depending on what price action is doing, if it's just plowing through early, and guys, this is something we don't talk about enough in the room. If it's plowing through early in the hour, okay, or let's say right after the European close, I'll hold it. I'll hold it and look for the next target. But if we're doing that towards the end of an hour, we're heading into 11:45. We're heading into 3:45. At that point, I'd be looking to probably just close out the trade or close out the majority of it and bring my stop to break even. Typically, a quarter of one of my trades, or even an eighth of my trades, will go break even, like a large percentage of the time. Because I always want to leave that little amount on there, so if the market does just continue to run in the direction I'm looking at, I got something on the table. That's just how I trade, guys. That's just my personal, humble opinion. Definitely not a trade recommendation from SB Trade per se. Questions? Okay, that brings us over the 9:30 hour here today, guys. Just a quick reminder: I'll be doing a Foundations of Technical Analysis webinar on daily effects tomorrow. So if you have time, 9:30 after the NFP release, I'll be on there kind of just talking methodology. We won't necessarily be talking about current trades or setups we're looking at. We'll just be talking about methodology, the use of median lines and pitchforks and basic trend line analysis to really put together a trade strategy. So I invite you all to join me for that if you have time. Otherwise, we will see you on Monday for the public session, Tuesday, Wednesday, and Thursday. Oh, quick reminder, I will not be here on Tuesday. So intraday webinars next week will be on Wednesday and Thursday. Jamie will be right on tap on Wednesday with the midweek as scheduled. Guys, hope you all have a great weekend. See you all next week. Cheers.